All right, so here's how to use the VA loan to house hack and actually turn it into a smart investment move. Now, house hacking is when you buy a multi-unit property like a duplex, triplex, or a fourplex, and you live in one unit and rent out the rest. Now, what's dope is you can actually start renting the other units out immediately as long as you're living in one of them as your primary residence. That's what makes multifamily house hacking such a cheat code with the VA loan. Now, if you buy a single family home instead, you usually got to wait at least a year, sometimes 6 months before moving out and turning it into a rental legally. Now, remember, the VA loan makes all of this possible with zero down, no private mortgage insurance, and low interest rates. So you can lock in a cash flowing property without needing a huge upfront bag. And here's the beauty of it. The rent from your tenants pays for your mortgage. So you're living in the property while someone else is paying off your loan for you. And if you're charging more in rent than your mortgage payment, then you're literally living for free and you're actually making passive income while still having someone else pay your loan for you. It's a win-win that builds equity and cash flow at the same time. Now, if you play it smart, you can use your VA loan more than once. There's something called your VA entitlement. And while you only get a full entitlement once, you can still reuse it as long as you stay within the county loan limits. Now, that number in most parts of the US is around 806K. So let's say you buy a 400K property, you live there for 12 months, and then you decide you want to rent it out and do it again. You still have about 400K left of eligibility to use with 0% down, meaning you could literally pick up like 2 to 3 properties using your VA loan if you buy smart. And that's a crazy opportunity if you're trying to build a rental portfolio. Plus, when you rent out the other units, you're not just covering your mortgage and making passive income, you're also unlocking major tax benefits. You can literally write off a chunk of your mortgage interest, property taxes, insurance, even repairs, and depreciate the rental portion of your home over time to lower your taxable income. And if you hold on to one of these homes for at least 2 years, then you decide you want to sell it, you can qualify for a capital gains tax exclusion, which is up to $250K if you're single or $500K if you're married. So what that means is if you make a solid profit on the sale of your home and it's under those numbers, you don't owe Uncle Sam a dime in capital gains taxes. So I'm telling y'all, the VA loan is a literal cheat code for vets trying to invest. It's low risk, no money down, and a smart way to start stacking cash flow and assets. So if you're not taking advantage of this benefit now, then this is your sign to start.